Over the last 3 years, I have personally withdrawn $520,000 in verifiable profits from the Forex market. 77,000 of that came from a single trade where I took a short on Bitcoin from 120 down to 75. And I want to show you the 5 numbers that you need to master in order to consistently earn the amount of money that you want to make from the Forex market on a monthly basis. This specifically is for people that wish to earn in excess of $12,000 or more per month on average from the Forex market. There are only 5 numbers specifically that you need to know, and I'm going to break them down for you right here, right now in this video. Now, here's a disclaimer. Forex does carry risk. You do run the risk of losing all of your money if you do not manage your risk appropriately. No, I am not a licensed financial professional. I am just a normal guy who used to work 2 bartending jobs 7 years ago that discovered Forex, ironically enough, through a network marketing company, and I got my ass kicked for the first 18 months of being a Forex trader. It wasn't until I learned some of the things that I want to be teaching you in my YouTube and in some of my courses where I learned how to truly become a consistently profitable Forex trader that withdraws those actual profits from the market, which of course are verified by my bank statements and such. So let's go ahead and let's dive into this video where I want to show you the 5 numbers specifically that you wish to master. Okay. Now remember, my results are not normal. After, smashing big trades like that, I think a lot of people think to themselves, oh, well, I want to make $77,000 in one trade. And the truth is that was a home run when what I really live off of is base hits. So while you can smash obscene profits in the Forex market by catching a big enough trade with a large enough risk on it, that's not how I live my normal monthly life. I really just focus on small incremental returns of large pools of capital. And I'm going to show you that math right here, right now. So the 5 magic numbers that you need to know as a consistently profitable Forex trader that actually withdraws those profits from the Forex market. 5 magic numbers. All right. So the first magic number that you will want to have or know is your funding amount. Now, your funding amount is determined by the prop firm or prop firms that you have partnered with. I teach every single one of my students, especially if they wish to earn at least $12,000 per month from the Forex market. I teach every single one of my students that the minimum amount of funding that you need is $1.2 million in funding. Minimum. Now, when I say minimum, I mean minimum. Could you get half of this? Could you do just 600,000 in funding? You could, but I prefer the path of least resistance. So my objective for you is to make earning the kind of money that you want to make as easy, as simple as possible. Let me not say easy, because Forex is hard. Trading is hard when you don't know what you're doing and when you have bad emotional control. When you know what you're doing, when you've got the right information, and when you've got good emotional control, you can 100,000% be a consistently profitable Forex trader that withdraws money from the market. But you got to be educated, disciplined, and patient. So if you're uneducated, undisciplined, and impatient, chances are you're going to continue to suck and give money to the market, which is fine because there have to be losers and there have to be winners. I mean, you got to lose so I can win and make money. Or we could both just be winners together and all the other knuckleheads can be losers. Your call. But anyway, funding amount, that's the first magic number. So if you want to make at least $12,000 on average from the Forex market, you need at least $1.2 million. There's that. Now, the next number, magic number 2, is the percentage growth to goal. Now, with the percentage growth to goal, you can see very easily that if you have $1.2 million in funding, the minimum percentage growth to goal is simply 1%. Okay, 1% of $1,200,000 equals 12,000. So there you go. Okay. That is the minimum percentage to goal, 1%. Now, can you earn above and beyond 1%? Absolutely, you can. But my conservative, and I know it might not be drive a Lamborghini and live in Dubai type of money, but hey, maybe you want to go follow one of those guys on YouTube. I'm not the dude that's going to sell you that lifestyle because I don't live that lifestyle. I don't drive a Lamborghini. I just drive a Ford Expedition that's fully paid off, a Chevy Corvette that's fully paid off, a Maserati that's fully paid off, and my wife also has a Kia that is fully paid off. So if you want to have cars paid off, or if you want to just rent Lambos and Ferraris so you can flex for people who don't even care that you exist, by all means, you can. But all 4 of my cars are paid off. My home is my home. And yeah, I can go wherever I want to go, whenever I want to go there. But I like to stay home in my office where I pretty much am out of trouble and safe and eating good food and making love to my beautiful wife. Anyway, so yeah, 1% of 1.2 million takes you to 12,000. Now, if you go a little bit beyond that, which I think is the right thing to do, and you'll see that in just a second, if you go a little bit beyond that, then you'll see exactly why going about 1.5% on an average monthly basis, gain wise, if that's your goal, you'll see exactly why that guarantees that you make your $12,000. Guarantees is in quotations. Okay. By the way, this is no guarantee of results, gang. This is purely hypothetical, purely imaginary, because I have to give all those disclaimers out. If you know, you know. Anyway, magic number 3 is the amount to earn the accurate withdrawal. And by the way, if you're like, what's he keep looking at? I'm looking at my notes because, I take notes before I come and speak to you guys and gals. I like to be sharp and efficient, and I reference my notes. And if you want me to just fly off the top of my head and just feed you BS, again, this is probably not the YouTube channel for you. Anyway, the accurate amount to earn for the accurate withdrawal. Okay. So here's what I mean by this. If you remember, most prop firms only pay you 80% of what you actually earn. So let's just say that you've got $1.2 million in funding. And because you've got that $1.2 million in funding, you earn 1% in the month. And of that 1%, you go to make your withdrawal. Well, they're only going to pay you 80% of that. So that means you're only going to make $9,600. That's the actual amount of money that's going to be deposited into your checking account, not including the fees that you will likely have to pay for transfer fees and cryptocurrency conversions, things like that. So what you really want to do is you want to shoot a little further than 1% so that you can cover the prop firm's portion, their percentage withdrawal, so that after they take their 20%, you then can have your full $12,000. So here is the math, okay? And this is where all of my math nerds start geeking out, and all the people who struggled in math in school start sweating. I'm going to do it right here for you, okay? Don't worry. Here's the way you work this out. You have to say that your goal, which is $12,000, is only equal to 80%. Okay. So what we then need to do is find out, well, if 12,000 equals 80% of my goal, then what is the true number that equals 100% of my goal? And this is where you take your handy dandy calculator. And I think my tablet's going to produce the number for us. We do 12,000 times 100. That's going to give us a number. Solve. There it is. 1.2 million. And then we do 1.2 million, or 1,200,000 divided by 80. And that's going to give us a number. That number right there is 15,000. And there we have it. So 15,000 is what you actually need to earn. Okay. Now, 1% of 1.2 million equals $12,000. All right. So we need a little more than 1%. What we really need is more akin to 1.2% or 1.3%, something like that. So let's now scale down. Let's just say that you've got $1.2 million, and this is all structured with the right prop firms that allow you to use cloud-based copiers, where you can effectively just trade one 200K account and have those trades copied over to 5 additional 200K accounts, or you can have one 100K account, you can have 12 additional 100K accounts, however you want to divide it up. I actually teach that in my program, the 7-Figure Prop Firm Playbook, and there's probably a link or something like that. You can get it in the description. But 1.2 million, if you've got that, and we look to earn, let's just say conservatively, 1.2%. What this now gives us is 14,400. So that's not the number that we need to hit. Again, we can just reverse engineer this. Let's do it. Let's overshoot just a little bit. Let's go for 1.4%. 1,200,000 times 1.4%. That gives us 16.8. There it is right there. So we can probably aim for anywhere between 1.3 and 1.4%. Let's just say 1.4%. All right. Now we're looking to earn 16,800. That's 1.4% of your $1.2 million in total funding. Here's what happens now. You earn your 1.4%, and we now get 16,800 times 80%, because that's all that we get to keep as the funded trader. And what that gives us is our grand total of $13,440 for the month. That is how you reverse engineer to make sure that you get to your $12,000 minimum monthly withdrawal. Okay, so that now leads us to the fourth magic number that you need to know, which is your win rate. Now, your win rate, in my opinion, your win rate needs to be of an asymmetrical trade setup with a consistent amount of risk for this to work. Okay. Now, my personal philosophy is you want to have at least a 30% win rate, 30%, which means over a body of work of every 10 trades, you will lose 7 and you will win 3. Okay. Now, what this also means is that you need to have a sizable asymmetrical return so that this is profitable. So all that one-to-one risk 50 pips to make 50 pips, risk 50 pips to make 15 pips, risk 25 to make 25, that bullshit stops. We do not do that at Elite Forex University. If I ever catch you taking a trade with a one-to-one risk to reward ratio profile, there's a very good chance that I'll find your address, come find your family, and then take them to safety after smacking the shit out of you. Now, this is the thing. You do not come into the Forex market in order to risk money and make the same amount of money that you risk. We don't win that way. Whenever you place a trade, you should risk an amount of money that you are comfortable with losing so that if you're correct, the amount of money that you earn is significantly larger than the money that you risked. Case in point, if you enter into a trade, and let's just say for the sake of easy numbers, you risk $500 on a specific position. First, if you lose that $500, it needs to not break your bank and it needs to not break your soul. That's important. So if you can't stomach $500 risk, don't risk that much on a trade, dumbass. What you do want to do is take that trade with that risk. And if you're wrong, say, I am perfectly fine with losing this amount of money if I'm wrong. But if I'm right, what I want is, in my opinion, especially if you are a Coach MJ student, at least a 3 times return. This is called a 1-to-3 risk to reward ratio profile. 3 times, not 2, not 1.5. I don't care what they said on any other YouTube channel or Instagram channel or whoever you follow with a rented Lamborghini and a fake chain. I don't care. 1 to 3 minimum. Okay? Glad we came into agreement on that. 1 to 3 minimum risk to reward ratio. So if you're wrong, you lose 500. But if you're correct, you make 1,500. Now, watch how this works. If you took 10 trades like this and you maintained a 30% minimum win rate, here's how this works. You will have 7 losing trades at $500 a piece, which means you will go into the negative $3,500. Boo-hoo, cry into your cereal. But then you will have $1,500 in profit across 3 trades, which makes you $4,500. All of a sudden, the $4,500 covers the $3,500, and you are now $1,000 in profit. See how that works? Now, the beautiful thing about this is your $1,000 in profit over the course of 10 trades, which means you earned on average $100 per trade. So if you know that you earn on average $100 per trade for every 10 trades, you simply reverse engineer the goal to the amount of trades that you must take, which is magic number 5. The amount of trades that you must take, amount of positions you must take in order to hit your goal. Now, here is the way you make this work. Again, it's a lot of math, but listen, if you want to make a lot of money, you've got to be good with numbers. That's just the way it is. If you want to make a lot of money and if you want to keep a lot of money, you got to be good with numbers. Now, you can either be a math whiz that knows how to compute things in your brain, or you can just use a calculator. And I think that using a calculator is the safest way to do this. But here's what we're looking at here, okay? You want to take your full amount of funding. In this particular case, we're looking at $1.2 million in funding. And we want to take this number and divide that number by the number 1,000, okay? That is going to give you the amount of money that you can risk per position, okay? That number right there is $1,200. Now, here's the beautiful thing about this. I'm going to show you exactly how to do this, okay? So pay attention. Don't leave this video yet. Pay attention. We're risking no more than $1,200 per position. Now, does that mean you go and you place a trade on your one account for $1,200? No, you take the amount of accounts that you have and divide that into your number 1,200. So let's just say that you follow my protocol where you had prop firm 1, and you had a total of 400K in funding with them. And then you had prop firm 2, where you had a total of 400K in funding with them. And then you have prop firm 3, and you have 200K in funding with them. And then you have prop firm 4, and you have 200K in funding with them. Okay. Here is how this works. You want to see, first and foremost, your master account as your low account, your smallest amount. So that's your master. You then want to see this 400K as 2 separate 200K accounts. Even if you've passed the challenges and you got the accounts merged, see them as 2 separate 200K accounts in order for this to work. Okay. So you do the same thing here. This is 2 200K accounts. So now let's add up the total amount of accounts that we have. 1, 2, 3, 4, 5, 6. We have 6 200K accounts. So if we're going to do a $1,200 risk divided by 6 accounts, then that means you cannot risk more than $200 per position per account. That is the way this works, because if you risk $200 on account number 1 of your 6 200K accounts, and you copy trade and you keep your risk equal across the board using the right lot size multiplier. And of course, these are all things that I show you how to set up in my program, the 7-Figure Prop Firm Playbook. Go ahead and link in the description if you want to grab it. If you don't, I don't care. I've already got it. If you take a $200 trade on account number 1, this becomes a $200 trade on account number 2, 3, 4, 5, and 6. Okay. So if you have a $200 trade on account number 1, you have a $200 trade on all 6 accounts. This is now a $1,200 trade. Does that make sense? Everybody nod their head and say yes. Perfect. So now here's what we're doing. We're risking a total of $1,200 per position, but we're not seeing the whole $1,200 because you're not looking at all 6 of your accounts. Yeah, you can look at the accounts to make sure that the trade effectively copied over. Do that. Make sure that the trades execute. But you're now just focused on the one trade. You're focused on the one position on the one account. And you give this trade a 1-to-3 risk to reward ratio profile. Now, let's reverse engineer all of this, okay? So we're risking $1,200 total, so we can make a total of $3,600, okay? That is what we're looking for. We're risking $1,200 in order to make $3,600. All right? So we're either going to lose 12 or make 36. That's the way this works. So let's say now over the course of 10 trades, we take 10 trades and we lose 7 of them. So we're going to lose $1,200 7 times. And that, of course, gives us $8,400 in total losses. Once again, cry into your cereal. But then we have $3,600 times 3 wins. Okay. And right now my iPad is not doing the math thing for me. So I'm going to go ahead and just do the math myself in my head because I am a dork. And that's 8, carry the 1 up. Here it is, 10,800. So we're going to lose 8,400, earn 10,800. And then we're going to do the math to see exactly how much money we made in terms of total profit. Now it wants to do it, ironically enough. That's $2,400. Okay, perfect. $2,400. We took 10 trades and we made $2,400 in total profit. Fantastic. So if we know that 10 trades equals 2,400, then that means one trade on average equals $240. Okay, so now we simply reverse engineer because we know if, once again, this is the most important part. Pay attention. Do not run away. Do not leave this video. Write this down. Record this. Rewind this. Watch it again if you have to. Understand this. The main thing is you have to have consistent risk. That is the most important part when it comes to trading. You have to have consistent risk. And then you have to have asymmetric setups where the reward is lopsided in your favor at least 3 times the amount of money that you risk. If you're doing anything other than that because you're listening to some fake YouTube trader, please, for the love of God, ball up your fist, take your hand, ball up your fist, and punch yourself in the face repeatedly until you black out, period. Because you don't want to make money. You want to gamble it into a fucking oblivion. Stop, okay? Here it is now. We want to take the amount of money that we wish to earn. And how do we know how much money we wish to earn? Well, that's because we've already done the work of identifying our magic number, the amount to earn for your actual withdrawal. If the amount to earn for your actual withdrawal is 15,000 or 16,000 or 16,800, whatever that is, whatever number you pick, because you must begin with the end in mind. One of Steve Covey's 7 habits of highly effective people is begin with the end in mind. So start the month with your goal in mind. And then when you hit your goal, stop trading. Stop. Hit your goal, stop trading, take your money, feel good about it, do something nice for yourself. Take your wife out for dinner or something. Go get a fucking haircut. Go get your nails done, girl. Book that vacation. Do something. Do something other than just fucking pay bills. Like, increase your lifestyle a little bit. Set some money aside so you can invest into other courses, coaching, and programming. Do some stuff other than just throwing the money down the garbage, okay? But make sure you actually reinforce all the hard work that you've been doing, because, hey, like, why did you learn how to become a Forex trader? You didn't learn how to become a Forex trader so you could fucking pay bills. I mean, yeah, you want to pay bills. That's nice, but you want to be able to do more stuff than just pay bills, right? And you want to be able to do that from the comfort of your home, right? Your home office. Like, I'm in my home office right now, and yes, you see me in this nice track jacket and my nice watch, but I'm in my fucking underwear underneath this desk right now. I'm home, and I'm already killing some trades, and I'm naked. So that's what you want to do, okay? Here we go. So we take that number, the amount of money that we need to earn, and we simply divide it by what we know is our average win or our average profit per trade. Sorry, guys and gals, the other camera died, so we're using my webcam now, but that's perfectly fine because the information is valuable. So anyway, the amount of money that we wish to earn, we figured out what that is. We're going to call that number, for the sake of conversation, $16,000. That's what we want to earn. We now divide that by 240 because we've discovered that we have a 30% win rate. And with our 30% win rate, we earn approximately $2,400. We earn $2,400 for that 10 trade set where we lost 7 of them and we won 3 of them with a 1-to-3 risk to reward ratio profile. So that means we earn an average of $240 per trade. So we take 16,000 divided by 240, and that lets us know the amount of positions that we need to take. And that equals 66.67. We know that this is 67 positions, okay? So now you know I need to take 67 positions per month. You might just want to round that to a nice, clean, easy number, maybe like 70 positions per month, okay? And if there are 25 active trading days per month, then you know exactly how many positions you could take for each of those 25 trading days. There aren't really 25 active trading days. There are really only 22 on average. So you would take the amount of positions divided by 20 and you round up, and that's the amount of positions that you would take. And this is from a day trader's perspective. This is not from a swing trading perspective, because swing trading is a completely different skill set. Not everybody wants to be a swing trader. I understand that. So for those who want to get in and get out of the moves, especially if you're trading with a 1-to-3 risk to reward ratio profile and you're using a 5-minute entry with a 5-minute stop loss and you're looking for a 1-to-3. I mean, we're talking stop losses that are anywhere between 10 and 15 pips and a take profit that is 30 to 45 pips. Like, literally, you can find those trades 3-4 times a day. If you know what to look for and if you know what you are looking at, you need to know, of course, how to develop a trade idea for specific currencies and currency pairs before you even approach the charts. But that's a completely different video. We're not going to talk about that right now. I just wanted you to know the 5 numbers that you need to know. So again, magic number 1 is the funding amount, the exact amount of funding that you need to have so that you can go to magic number 2, which is the percentage growth to goal. Okay. Now, the easy rule of thumb is the more funding you got, the smaller the percentage you need in order to hit your goal. Simple and plain. Magic number 3 is the amount to earn for your accurate withdrawal. That's the 3rd number. 4th number is your win rate. And it's best to know what your win rate is either out of 10 trades or out of 50 trades. Once you know what your win rate is out of the best 10 or out of 10, and I'm talking win or loss, consistent risk, consistent reward, not break even. So if you take 15 trades and your trading plan says when you get to 1-to-1, move your stop loss to break even. If you take 15 trades and 8 of them get taken out at break even, then you don't count those trades because they're not taking you out in the negative unless you're paying swap or some type of commission or something like that. Make sure you cover your spread when you move your stop loss to break even, for the love of God. Anyway, if you take 15 trades and 8 of them get taken out at break even, then you only have 7 trades that you can evaluate your win and loss ratio on. And if of those 7, if you lost 5, you've got 2 winners. You still got to take 3 more trades and have those trades complete, either with a win or a loss. That's the way you do that. And if you go 0 for 10, take 10 more trades and see what your win rate is out of 20 positions, okay? Because you could go 0 for 10 and be like, damn, I missed all 10 of those positions. I lost all 10 of them. And then you can take the next 10 trades and you can win 6 of those. So now you've gone 6 for 20, which conveniently enough breaks down to 3 out of 10. So don't trip and don't blow your account on 10 trades. For the love of God, find your win rate, best of 10, best of 50, or best of 100, and then just reverse engineer the numbers. That is all you need to do, because once you figure out what your win rate is and you know what your average amount of money is per position, then you just reverse engineer to find out the maximum number of positions that you have to take in the time frame of 30 days so that you can hit your goal. That's it. It's all math. Follow the instructions. Keep your freaking discipline tight. Keep your emotions in check, and you should be just fine, okay? Hopefully you found some value in this video, and if you want some more, then you can click on one of the videos that just popped up on the right-hand side. Make sure you smash the like button and subscribe, and turn on the notifications icon so that whenever I drop a new video, you can be notified and you can get more free sauce like this, all right? Until next time, this is yours truly, Coach MJ Worthmore, signing off. Peace, y'all.